Hi, Jasper Basson. Financial education is an absolute must for entrepreneurs. With better understanding, you can manage your business so much better. One of the things I come across every 6 months is when I speak to clients on the phone is provisional tax. Every August and every February, clients seem to struggle with understanding the timelines and the structure of provisional tax. So in this video, later on, I will go to a whiteboard and explain and draw some pictures for you to understand and better understand provisional tax, the timelines and the structure. So for now, before we go to that, let's first understand who need to pay provisional tax and who don't. So the list of people that actually must submit provisional tax returns are companies and the directors of those companies, and closed corporations and the members of those corporations, trusts, sole proprietors, that means when you trade in your own personal capacity, and also if you're a salary earner but you have derived income from a part-time business, rental income, or have any investments with interest or dividends that's been paid. Any of those items that you have with a net profit of more than 30,000 Rand would also require you to submit a provisional tax return. The list of people that don't need to submit a provisional tax return are salary earners only receiving a salary from one source, salary earners, like I just mentioned, with a net profit of additional income less than 30,000 Rand derived from a rental income, any investments, or a part-time business. The other two structures that's also exempt from provisional tax are PBOs, that's all public benefit organizations, MPO, that's exempt from any tax, or body corporates. Now that we understand who need to submit provisional tax returns, let me go to the whiteboard and explain to you the timelines and the structure of provisional tax. Right, let's go to the whiteboard and let me draw you some pictures of all the timelines of provisional tax and how it actually fit into the income tax at the end of the year together with the financial statements. So let's work on the current financial year that we're busy with, March 2019 till 28th of February 2020. So let's assume this is our financial year that we're working with, and this is the current one that we are actually in right now. So your first provisional tax period would have been, let me just put it in here, the 1st of March 2019 till 31st of August 2019. So that would be your very first provisional tax period that you would need to submit to SARS. So what would generally happen, most of the clients are on something like stage 1, zero accounting, QuickBooks, and because you have real-time figures and real current figures up to date, you can take your figures from the 1st of March 2019 up to January the 31st of basically July 19. And what you will do is you will take those figures and we work back to a year for estimate for the full year of March 19 to February 20, what we actually estimate it would be, and you work out the tax on that, and then we divide that by 2 and we pay the half of the amount before the 31st of August. So that's your very first provisional tax period. You work according to an estimate that you assume it would be for this period, and you basically half it in 2. Right, so that's our very first provisional tax period. Very important, it needs to be very accurate. At least I try to estimate at about 20% of your actual real taxable income that you assume it would be. So sometimes difficult because you don't always know what's going to happen. Right, so the second period would be the 1st of March, well basically the 1st of September 2019 up to 28th of February 2020. But in essence you will work on the 1st of March 2019 up to the February 2020, and January we will have figures up till 31st of January 2020. I write a bit bad on this whiteboard, but you get the idea. And this is your second provisional tax period. Right, so what happened right now was we will work out the estimated taxable income for the full period, working on figures from the 1st of March 19 up till the 31st of January 2020. And we will actually calculate it back to basically divide by 11 times 12 to get to an equivalent of the year. We work out the tax, and the tax payable would be declared on this return less what we've already paid right here, and that would be your total that you actually pay in your second period. So that's your two provisional tax periods for this. Both of them are based on estimates, but estimates based on real information that you have from your accounting program, as much as possible that you can use from there. And again, try to keep it within 20% accuracy. Well, try to get as close as possible to accurate with a variance of 20%. So then you get to the next timeline. I'm going to write it a bit to this side, otherwise I won't have any space. So by roughly July 2020, we can submit our tax returns to SARS. And so up to this point, you've done provisional tax based on estimates that you would use right here. Here you actually do your financial statements, annual financial statements for the period, again, 1st of March 2019 to 28th of February 2020. Once you've done your annual financial statements, you will have the final figure, and remember again, that gets done July. Well, so from July you can do that. Once you have that accurate figures, you will have the actual tax figure that you need to pay to SARS less, I can't write, less that two amounts, that one and that one, that you've already paid, and that will go there. You will actually deduct it from the amounts you've already paid, and then you will get your end of the year, your actual tax assessment, ITA 34, that you will receive. That will be the amount that you pay into SARS, or you actually get a refund from SARS. So if your estimate were very correct and you overestimated, you will get a refund right here. If you underestimated or haven't paid any provisional tax for the period, you calculate your income tax right here, you have nothing to deduct right here, and you will need to pay this to SARS, and with potential interest and penalties because you have underestimated the amount. So that is in short your provisional tax, and this runs obviously for every period after this. The next period on this would be the 1st of March 2020 to 28th of February 2021, and the next provisional tax would be the 31st of August 2020, and the same cycle just rerun again. So I hope this picture, I haven't drawn very beautiful pictures, or I haven't written very nice on this whiteboard, but I hope this message at least got through, and it's a great explanation of how the provisional tax actually works. Thank you for watching. Just a quick reminder to grab your gift pack for entrepreneurs in the link below. It's a gift pack for entrepreneurs to the value of 57,000 Rand, free of charge. All you need to do is activate it. Part of that gift pack for entrepreneurs is a voucher of 3 months for 3 months free accounting services from a company, Dryk Holdings. All you need to do is activate the gift pack voucher in the link below, and we will be in contact with you as soon as you've done that.